Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 13th of June, and the market has come back yet again. Nifty almost near a all-time high weekly close level. If we close this week at the current level, we will create that record. And you know, it's quite heartening to see that despite all the negative news around the world, our market is coming to a new all-time high. The data from the local markets has been encouraging. We had a great IIP number. The inflation is totally, subdued right now. Crude oil is falling, so everything seems to be in place for the markets to go up. Indian bond yields are falling. You could not have asked for more actually. So Nifty cruising well after 3 or 4 days of a hiatus. Today doing well. Nifty heat map you can see ITC doing extremely well today along with other FMCG counters. Uh, Levers, Nestle, Britannia, Tata Consumers. You had good moves in Reliance, uh, good moves in consumption stocks like Titan, Asian Paints, etc. Good moves in Bajaj Finance, Bajaj Finserv, Axis Bank, ICICI Bank, and good moves in steel and cement and real estate stocks also. So overall, a good day from that perspective. Real estate is the way to go right now. 3% up on a single day. In the last 1 month, 15%. In the last 3 months, 33% move on real estate index. Of course, it is largely dominated by DLF, but nevertheless, the sector is definitely in a good stead. And with interest rates pausing and yields coming off, it's like you know uh, a silver lining for this particular sector. FMCG, pharma, consumption, metals, commodities all doing well today. Autos, minor loss in autos today, but insignificant. Banking, whether it is PSU bank and private bank, were also subdued relative to the market, but nevertheless a good session with Nifty gaining 0.6%. Mid caps have been on fire and they continue to do so. 34761 is the level achieved. Small caps, which just you can say 10 or 11 months back were at near 7500 levels, have gone up 50% at near 10,300 levels and about to breach into new highs. uh, Nifty Bank has been simmering last 4 weeks near the all-time highs, allowing the rest of the markets to catch up. And some of the sectors actually doing well, looking good for the future. Nifty Pharma is one of them, where a breakout of this flag pattern could happen going into second half of 2023, and that may unleash a lot of pharma stocks on the higher side. It is good to recall that pharma has not performed since 2015. We've not really been able to take out this high convincingly, and 8 years later, we may be at the cusp of a new cycle. Who knows? Nifty FMCG has been doing extremely well, making new highs almost on a monthly basis. Nifty Real Estate, I've already talked about, is a new kid on the block, and after making a low in 2016, last 7 years has been going up, 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 and now almost a decadal high above 560 it will reach. Nifty Commodities is another index which is looking extremely good, just at the verge of a breakout, and one may see some fireworks in coming years on this. This is the reason Indian government bonds, the yield is falling off. It had reached almost 7.65%, and now we are down to 7% with yields coming off. It is good news for industry, it is good news for the markets, good news for real estate. So, this is something that is fueling the growth of the markets. So, yesterday I tweeted in the evening. about Section 54F of the Income Tax Code. Now, I am not a chartered accountant, neither do I have very deep knowledge about the income tax code, but a lot of people told me that they would like to know more. So I want to share whatever I know about it, and then you can go read up on this, or I am hoping that other more knowledgeable people can jump in and along on this tweet and clarify doubts for whoever has those doubts. So put in your comments on this tweet in the tweet thread, and I'm sure somebody or the other will answer you if I'm not able to do so. So Section 54 is all about capital gains or tax exemption on a residential house. So why was this section introduced? This section was introduced so that people are encouraged to buy residential houses. So it's a sort of a incentive push by the government that if you go buy a house, we will give you some tax break. That is the whole idea behind Section 54. Now, if you remember, for a long period of time, even capital gains on stocks was zero. That was like a to motivate people for long term investing. It was an incentive to put for people to put money into the capital markets, that you'll not be taxed, so go ahead and deploy money for long term. This is also somewhat on similar thought process, that you know uh, investments into the real estate sector builds a lot of trickle down impact. When you build a house, the whole economy actually gets impacted positively. You generate jobs, you generate demand for so many materials, and capital assets get created. So in order to push our people to go and buy new houses, government has this income tax exemption. Now, this Section 54 has several nuances or parts to it. Main Section 54 is something which almost everybody knows about it, that you sell a house and the capital gains you have on that sale can be put into a new purchase or a construction of a house, and you will not be you will not have to pay the capital gains on on your sales. So let's say you bought a house for 1 crore, 5 years later you sold it for 2 crores, and let's say after indexation and everything, your capital gains, long term capital gains on that was say 80 lakhs. That 80 lakhs, if you go ahead and put into a new house, then you don't have to pay any long term capital gains on that 80 lakhs. That is the premise of Section 54, which most people know about it. Uh, this is only applicable for individuals and HUFs. So Hindu undivided family concept is there. Only these two entities can make use of these sections. It is not available for corporates or partnerships or any other format, LLPs and so on and so forth. So only individuals and HUFs can use it. Now, what happens is that while most people know about Section 54, let me also go to this. So, this is one table that I found on the internet. I hope you can read it, but even if you're not able to read it, I'll go through it in as much detail. So, while everybody mostly knows about Section 54, there are many other sections within 54. So, 54 EC is one, 54F is one, and there are several more which pertain to agricultural land or to non-residential houses and so on, so non-residential properties and so on and so forth. So, coming back to Section 54, first let's clarify what is 54. So, essentially, it is exemption of capital gains on sale of house property. So you will not be able to sell land and get Section 54 benefit. You will not be able to sell a office or a factory or industrial plot or agriculture land for Section 54. Section 54 clearly says you sell a house, which is called house property, and you buy a house. So it's basically one house to the other house, that exemption is available. You could use that capital gain derived from that one house into buying two houses also, right? If your capital gains is less than 2 crores. And there's a time limit. So when you sell this house, let's say you sold this in March 2022, then any property that you purchase from 1 year before or 2 years after, you can claim that exemption. That is also clear. Uh, Also, you could look at Section 54 EC, which is essentially you sell a house, uh, uh, essentially you sell a house or land and building. So this one has a slightly different, scope of what you're selling, and you're investing the capital gain on what you've sold into some bonds, specified bonds. So there could be NHAI bonds, IRFC. Most of these PSU bonds are there. So there are specifically 54 EC bonds which you need to come in for minimum lock-in period of 5 years, and you need to come in within 6 months of your sale of your asset. So this is something which is limited to 50 lakhs only. So if you have a smaller capital gain and you are not buying a new property after selling off your asset, then you could come to 54 EC and just use these bonds, and not pay capital gains on your sale. Now, the most important and the reason why we are having this discussion today is Section 54F. Now, what F does different from 54, let's go through that. So, in Section 54, you had to sell a house to get the benefits of that capital gains exemption. Here in 54F, it is all assets except a house. So, you could sell gold, you could sell your long term shares, you could sell unlisted shares, you could sell art, you could sell, you know, any asset that has long term capital gains. That entire proceeds in section 54, only the capital gains had to be reinvested. Here in section 54F, the entire proceeds of the sale has to be reinvested. So if you sold gold for, let's say, 2 crores and your capital gain on that was 50 lakhs, you'll have to invest the entire 2 crores into a house property. Again, the investment has to go to a house property, not to plot, not to office, not to industrial land. It has to go into house property because that is what the government is promoting. Now, the difference you understood, right? So, Section 54 says only capital gains to be invested. Section 54F says entire proceeds to be invested. So, if you bought stocks for 1 crore and today they are worth 5 crores, and you have 4 crores of long term capital gains on it, assuming there's no indexation for now, that entire 5 crores will have to be invested and not the 4 crores of capital gains. And let's say you are having entire sale proceeds of 5 crores, but you buy a house of only 3 crores, then 3 crores will get adjusted, but on the rest 2 crores you'll have to pay your capital gains tax on that. So that's how the proportionate thing will work. And what can also happen is that you may want to combine some of these sections. Now, there is debate around whether you can combine Section 54 and 54F, but I have seen case studies, case laws, where people have been able to use both Section 54 and 54F. So, let's say you sold a house for 2 crores, you sold stocks for 2 crores, both have, let's say, capital gain of 1 crore each, and now you bought a house for 3 crores. So 1 crore of capital gain from your house, section 54 gets readjusted here, and 2 crores of your stock sale, the entire proceeds, also get the benefit of buying this house. So overall you are not paying any tax at all. So a lot of people do not know about Section 54, their CAs, because they are so busy, and possibly because people don't ask them specifically, also do not suggest, because most people have some asset which can have some long-term value. So some jewelry, some odd piece of land somewhere, some maybe in the village, somewhere you could have some long term capital gain, which is not a house property, which you can utilize here very, very effectively. And you can also, sort of do tax harvesting, in the sense that, okay, you have a huge portfolio and you don't want to sell it, but you can sell it off, buy your property, and buy your stocks back. So you've been able to, harvest that gains out of your stocks today, and buy this property, and now you have a lower cost price for your next, whenever you will sell them. So all this is possible. This is very much, in the code. It is legal, it is doable. You can combine any of these three sections. There are other sections which deal with agricultural land, which deal with selling of house and putting those proceeds into a new corporate entity. You can buy shares with that proceeds of the house, or other assets. So that is also very interesting, but we'll get into that section in some other video. There are tons of materials available on Twitter and on other places, lots of blogs. My favorite CA, Mr. Neeraj Arora, has also a very nice Twitter thread on this. Please go and read that also. Also, a lot of YouTube videos are available. This is nothing new, but just that sometimes there are certain things which don't come to your mind when you are doing such transactions. I always encourage people to buy their first house. And when you're buying your first house, Section 54 will not be available to you because you have no house to sell. And so that is where, you may have some long term capital gains to take benefit of. You must take benefits of this code. And wish you a happy new home. Thank you so much. See you in the next one. Bye.